Good evening, everyone. Welcome to the channel. Today I am going to talk about Air China interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Air China Limited offers a diverse range of businesses and services, including air passenger transportation, air cargo services, aircraft, engineering, airport ground handling services, import and export trading activities, cabin and airline catering services, air ticketing services, human resources management, aircraft overhaul and maintenance, financial services. Air China's stock price skyrockets. A year of resilience and growth in a remarkable turnaround. Air China's stock price has surged by over 90.07% in the past year, driven by a combination of factors that have revitalized the Chinese civil aviation sector. The industry's robust recovery from the pandemic, coupled with strategic operational expansions and supportive government policies, have contributed to this significant growth. A key driver of Air China's success is the strong rebound of China's civil aviation sector, which has returned to profitability after 4 consecutive years of losses. Passenger traffic has reached 730 million in 2024, exceeding pre-pandemic levels by 10.6%, with projections indicating a further increase to 780 million in 2025. Air China's strategic route expansion and increased capacity have also played a crucial role in its growth. The airline has launched new international routes, resumed suspended services, and boosted domestic flights to meet growing demand. Government support, including relaxed visa-free transit policies and simplified visa application procedures, has further stimulated inbound tourism and benefited airlines like Air China. The company's improved financial performance, with reduced losses and significant EBITDA growth anticipated, is another factor contributing to its stock price surge. Operational enhancements, such as new passenger services and interline check-in services, have also enhanced the airline's offerings. Overall, Air China's resilience and adaptability in the face of challenges have enabled it to capitalize on the industry's recovery, resulting in a remarkable increase in its stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The launch of new premium lounge, Zichin, and the addition of express routes contributed to increased revenue. Enrichment of in-app payment methods, extension of intercity air rail services, and expansion of domestic through check-in flight services also drove growth. International air passenger revenue saw a significant increase of 16.09%. While air cargo and mail revenue rose by 6.96%. Other income and gains increased by RMB 635,005. Revenue decline drivers. Mongolia Airlines experienced an 8.5% year-on-year decline in revenue. Mainland China air passenger revenue decreased by 4.92%, and mainland China air cargo and mail revenue dropped by 7.13%. Government charter flight services declined by 19,075, and air catering, onboard supplies, and aircraft parts income fell by 1,284. These factors highlight the key drivers of revenue growth and decline for the company, with international air passenger revenue being a significant contributor to growth. Net income and profit margins. A shift in financial performance. The company's net income has undergone a significant change, transitioning from a loss to a net loss of RMB 1,805 million. This decline is evident despite a slight increase in revenue growth of 1.54%. However, the profit margins have shown an improvement due to effective cost reduction measures implemented by the company. The combination of these factors indicates that while the company's financial performance has not fully recovered, it has made progress in stabilizing its losses and improving operational efficiency. The company is indeed generating positive operating cash flow. This is evident from the net cash inflow from operating activities, which has been consistently high in both 2025 and 2024. The figures of RMB 14,828 million for 2025 and RMB 14,253,072 for 2024 demonstrate a strong ability to generate cash from its core operations. This is a positive indicator of the company's financial health and stability. The company's debt level and interest expenses have undergone significant changes. While the total debt has increased by a modest 1.47%, the current interest-bearing debts have decreased by 16.64%. Conversely, non-current interest-bearing debts have risen by 10.77%. Notably, total interest-bearing borrowings have increased by 4.1% from RMB 159,381,665 to RMB 165,752,032. In terms of interest expenses, a notable decrease has been observed, with interest expenses dropping by 35.6% from RMB 196,418 to RMB 126,325. This decline is attributed to the reduction in interest on interest-bearing borrowings by RMB 264,238. However, imputed interest expenses on defined benefit obligations have increased by a relatively small amount of RMB 2519. Overall, these changes suggest that the company's debt level and interest expenses have undergone significant adjustments, with some areas experiencing increases while others experience decreases. The company's financial performance varied across different segments and regions in 2025 compared to the previous year. Notably, domestic market and circulation showed improvement, while international markets, particularly North America, struggled. Additionally, airline operations declined by 15.3%, and other operations decreased by 22.7%. These results indicate that certain areas of the business require attention to improve overall performance. That concludes the financial summary for Air China. Feel free to comment below, and I will be happy to answer them when possible.